Alright guys, so in this lesson, you're literally going to learn the holy grail of my trading. You'll be combining everything you have learned so far in this course, in this masterclass, into this one small, neat package. So what is the holy grail? Imagine we have a swing opportunity. Let's say an IBO on a higher time frame, so breaking retest of the daily 50 EMA. And at the exact same time, as you have that swing opportunity, instead of taking that swing trade, you go a little bit deeper, you look at the intraday charts and you find a day trade. Let's say a CBO. So now you have an IBO on a higher time frames and you have a CBO on a lower time frames. So you're executing that swing trade, not as a swing trade, not with a swing entry, but with a day trading entry. And by doing that, by combining the two together, by combining the swing trade and the day trade together, what you're able to do is you're able to like supercharge your position. You know, and with that, literally, instead of having like this wide stop loss, this wide entry as a swing order, you know, you're able to execute the same trade, but with a day trading entry. And because with a day trade, everything is a little bit tighter than it would be with a swing trade, therefore your position is going to be much larger than a swing trade. And a lot of times it's 3 times as much. Let's say the swing trade would be 4%, a day trade could be 12%, on the same move. Literally, it's a big difference. And without going any deeper into this intro, literally, just know that this is the holy grail of my trading. Everything you guys have learned so far, put it all together using multi-time frame analysis, and you're gonna get something beautiful. So with that said, guys, let's hit the charts and I'll show you exactly what I'm talking about. Alright guys, so in this example I'm going to show you a beautiful trade on Pound Aussie, and we're going to pick up on, this is literally where we merge everything together. Everything that we have learned, all the strategies that we have learned, and we put it all together. In the next lesson we're going to be talking about management, right, which you can come back to this example and kind of revisit the management, okay? But for now, let's kind of put it all together. And let me show you actually how to maximize your returns. So with that said, I'm going to start off here. This is the intraday charts. We're going to start off here with the higher time frames, and this isn't going to be too long. It's fairly simple once you understand, and you should understand everything by now. So maximizing profits. One way of doing it, there's a couple ways of doing it, and I'll show you 2 ways, okay? The first way is identifying one of the strategies on a higher time frame. Okay, and this is it. What strategy would you guys say this is? When I took this trade long, think about it. Trade was taken right here on a daily time frame. What does this look like? IBO what? IBO A. This is a perfect IBO. We have a potential pullback on a monthly chart. Right, so monthly kind of has this little double bottom, so potential pullback on a monthly chart. It's bouncing off of a little bit of support here, right? But it's a pullback play. Imagine if this was a monthly run, totally different story too. I like catching this play over here and catching that monthly run, okay? But this is a monthly pullback. Then on the weekly chart, do we have a confirmed bullish price action? Yeah, we're kind of slowing down. Multiple dojis within this triangle pattern. Bullish MACD, and the trade was taken right here. Trade was taken after the bullish engulfing. So we get the double bottoms, the deceleration, and then boom, the bullish engulfing with bullish MACD. And trade was taken right here. So this pretty much qualifies as an A, IBO A, because it's giving us bullish price action. It's not like we're waiting for a higher low. With a B, we already have this double bottom and the bullish acceleration. So this kind of falls under an IBOA, even though it's still not a full breakout, but it does. So given that it's an IBO pullback play on a monthly chart, what's the most ideal target? It's a pullback play. Think of it as a day trade. What would you do? If it was an IBOA pullback play day trade, you would target the 4-hour 50 EMA, right? Well, in this case, the 4-hour is equivalent to the weekly chart, right? So targeting the weekly 50 EMA at 72, or in this case, you can also kind of see what's happening on a daily time frame. right? And you can see that on a daily time frame around 72, around the weekly 50, we have these daily highs. So maybe target like 71.5, which is also the daily highs, and just below the weekly 50, right? So that's kind of the potential target. But do we have an IBO on the daily chart? We'll check it out, right? So we bottomed out at that support, same as on the weekly, same as on the daily. Then we kind of got squeezed out of this falling wedge, boom, to the upside, broke that daily 50 EMA and came back to retest that general region. Fell a little bit lower, you know, but the trade was taken right here. Let me zoom in. Trade was taken right there on this day. Okay, so it was already giving me a higher low, and the weekly chart was great, you know. Monthly chart was good, but the weekly chart was great. And full breakout, retest, trade was taken right there on the 31st. Right, so it's an IBO. So we have an IBOA on a daily time frame, you know, on the higher time frames, combining the monthly, weekly, daily, and the most ideal target, given that it's a pullback, weekly 50, but there's also some resistance there on the daily chart, so just a tiny bit lower, 71.5, just below the weekly 50. Easy, you know? So as a swing trader, you can take this long as a swing trade, right? Take it on the same day, right there. Target 71.5, right there. Stop loss, below the lows, 4%. Pretty good, you know? So it's a 4% move, 4.2. Not bad. But as a day trader, well, you can take it a step further. So as a swing trade, this is already a great setup and you banked 4%. Easy, you know? Easy, and that's how you do it. So this is just applying a swing strategy on a higher time frame. Or sorry, one of our strategies on a higher time frame, right? As a day trader though, so a swing trader, remember this number, a swing trader made 4%. As a day trader, well, you gotta put in a little bit more work as a day trader, right? So as a day trader, what do you need to do? Well, you need to confirm with the lower time frames, and you gotta find one of the strategies on a lower time frame, right? So you believe that a daily run's beginning. So it's the same thing. We believe that a monthly pullback is beginning. Well, in this case, we believe that a daily run is beginning. So you need intraday confirmation in one of the strategies on a lower time frame. So in this case, when you drop down to the lower time frame, we had a CBO. Okay, it actually, when we zoom in here, let's zoom in real quick. I'm not going to spend too much time on it because you guys already know this stuff. But this started off as an ACB, as an advanced continuation breakup. But you can see here, it never kind of paused on that 4-hour time frame, you know. But this was kind of the characteristics of an ACB. But it never paused. It went lower, and then the 1-hour chart started to decelerate lower, you know. So then eventually, when the 1-hour chart broke out, the 4-hour chart also broke out, you know, and then it came back to retest that 4-hour, 1-hour 50 region. In this case, it went a little bit lower, you know. So I ended up executing it when the 1-hour chart kind of gave the tweezers, you know, just kind of below that 1-hour 50. That's totally cool. It was still rejecting the 4-hour 50 and overall higher low. Still, and the higher time frames were like great. So if I didn't take this position, it would be stupid of me, you know. But this started giving me this tweezer, forming that higher low, and then the trade was taken on a 5-minute breakout right here, right after the 1-hour tweezers, right after the higher low. So it's a CBO, you know, a simple CBO with beautiful higher time frames, right? So now we have multi-time frame confirmation. Right, so with this multi-time frame confirmation, now this position all of a sudden turns from, you know, not just a typical swing play, but an awesome day trade, but literally with confirmation all the way from the monthly to the weekly to the daily to the 4-hour to the 1-hour, and followed by 5-minute entry. So we have every single time frame that we look at, literally every single time frame that we look at is bullish. And if every single time frame is bullish, then that's an awesome setup. And they happen quite often. It's pretty much every single time a swing play would happen, you know, that you can do this. So every single time you have a swing trade that kind of fits the strategy, you can do this. And there's even another way that you can do it as well. Even if there is no swing play that fits the strategy, there's still one way that you can do it. And remember that this is multi-time frame analysis. Multi-time frame analysis and playing our strategies, all you really need to do is apply 3 time frames. So can we ignore the monthly? What if we believe a weekly run's beginning, the daily chart's confirming it, and the setup happens on a 4-hour chart? You can still take it a step farther. That means we're playing a weekly run, whereas in this case, we're kind of playing that monthly pullback. There's going to be other opportunities. There might be like a weekly 50 EMA rejection, but nothing on a monthly. But then daily is great, 4 hours great, the 1 hour great is great, and there's a day trading entry. So I'll show you in the next example that, but in this example, this is literally where we have everything, monthly, weekly, daily. The strategy can be applied on a higher time frames. This was an IBOA on a higher time frames. Then we dig a little bit farther at the time of the entry. And on the intraday chart, there's a CBO, and you can take that, let it ride. And here, if you just took it to, the weekly 50 EMA into those daily highs at 71.5, remember the swing play? That was 4%. A day trade at the same time of a day trading entry, 14%. That's 10% more. 10% more, And that's the thing. You're not always going to find these opportunities because these monthly setups, these higher time frame setups, where they happen maybe once a month, maybe once every 2 months kind of thing. And I'm going to show you another example that happens a little bit more often, right? But catch these, maybe even if you're a swing trader and all you wait is for this, you can still execute these swing plays as day trades like I showed you, or you can just keep it simple and execute a swing. But if you want to execute as a day trade, well, you can take it a step farther. Obviously, there's a little bit more risk because your stop loss is a little bit tighter, right, than a swing trade would be, but that's the reward, Because of a tighter stop loss, you get a much better reward. But also, by the safety there is that by applying the strategy to the day trade, right, you have even more confluence at the same time too, right? So that's how you do it. Maximizing profits by utilizing higher time frames, and it's easy, it's simple. And you guys saw here, in this case, you could have also, because I took profit right here, continued to go higher, So if I didn't set a profit target at that weekly 50 EMA, you could have utilized the short-term management strategy, and you would have been using the short-term management strategy along the way. And what that is, it pretty much is, you will learn it in the next lessons. What that is pretty much is trailing the 4-hour 50 EMA, right? And exiting of the 4-hour 50 has a clear break. So in this case, this never really had a clear break right here, just gonna consolidate on the 4-hour 50, right? So you'll be trailing well below the 4-hour 50, right? Not choking it. And I'll explain that later. But if you managed it, if you never placed a profit target and you pushed it farther, maybe you're pushing up to, maybe you wanted to play the breakout and you're pushing maybe up to the monthly 20 or something, right? Then you'll be utilizing utilizing the short-term management strategy by trailing the 4-hour 50, which in this case it ended up being kind of like a long-term management strategy too. But you'll be trailing the 4-hour 50 and you'll be exiting when the 4-hour 50 breaks. And here you can see that we developed bearish MACD, okay? So this was already after profit target was hit, okay? So profit target was hit right here. Then it continued to go higher and never broke that 4-hour 50 EMA. You can see it rejected it one more time until it finally broke. And when it finally broke, and we exited right there by not setting a profit target, but by following the management technique, then this profit all of a sudden would have turned. It wouldn't be 14%, but it would have been, exit was right there, so it would have been 18%, an extra 4%, and that is what you can do. Again, these setups don't happen often, but they happen. When they happen, you can take advantage of it and all of a sudden kind of supercharge your account, because you catch a couple trades like this a year and all of a sudden, it's all of a sudden it just adds so much capital to your account and it just supercharges it, because that's an 18% move. If you set a profit target, that's a 14% move. If you take a swing trade, that's a 4% move. Big difference. So if you're a day trader, if you know how to execute day trades and you find these higher time frames, the setups, then you utilize them, then boom, all of a sudden you can make much more. And this is a question I always got, is, well, if I'm a day trader, all I really need to do is look at the daily 4-hour, 1 hour. Is that correct? My answer is yes, right? And they're like, so I don't have to look at the monthly chart, weekly chart? No, you do not. If you're a day trader, you can just look at the daily for 1 hour and do your thing. But you will not end up with this number. If you just looked at the daily chart and utilized a day trade, and you didn't know that there was all this shit happening on a higher time frames, you would not have cut this play. You would not even know that this play existed. You would have no clue if you didn't look at the higher time frames, if you didn't look at the monthly and the weekly, So that's the importance. In order to catch these setups, you got to be prepared, and I was prepared weeks in advance when this was happening, when the weekly chart was already decelerating here, forming the double bottoms. I already knew the display was happening. I was just waiting for the break and retest on the daily chart, but I was already knew when the daily chart was stalling here, when the weekly chart was stalling, that this was coming. And I was just waiting and waiting and waiting. And then when it came, boom, took the trade long. And for this, all you really need to do to catch these setups is to, once a month, at the beginning of a month, make a watch list. Is there anything great happening on the higher time frames? Can one of my strategies be playing out on the higher time frames? Then you do this weekly too. Every single week, you do the same thing. Is there anything playing out on the higher time frames? And you just make your watch list, just like you do a daily watch list for day trading. You do the same thing. That's what a swing trader would do. Monthly, weekly, period, And then you wait and wait and wait and wait. And then when those monthly charts, weekly charts play out, then you execute as a day trade or a swing trade. But you can see the difference between swing trading and day trading here. It's huge. So that is it for this example, right? Simple and easy. We already know everything behind it, how to do this. You know it, now it's just practice and experience and waiting for these setups to happen again, But that's just how you do it. You just combine the strategies. You put the strategy as a swing trade and then execute it with a day trade, period, and you get some crazy numbers. So that is it for this one. I'm going to show you one more example. All right, guys. So in the second example, I'm going to show you something that's a little bit more common, because the other one, it was a full out strategy playing out on the higher time frames. In this case, you're still utilizing the higher time frames. You have to, but it's just a day trade and pushed for a higher profit target. And we're going to, in one of the lessons, actually, I'm going to be covering this in a lot more detail and how to do it properly. But here you can clearly see that, it's a daily pullback. That's it. It's just a daily pullback for about 5%, right? But you can see that it's sitting on the monthly 50 EMA, right? It's rejecting the monthly 50. The weekly chart's got resistance in this area. At the time of the entry, the weekly chart was giving us a doji in this high test type of looking candle. And the trade was taken right after that, playing the weekly and the daily pullback, right? If the daily chart had double tops, then you kind of can play the monthly run to the downside, But the daily chart doesn't. The daily chart is just a pullback, and the trade was taken right here, as it was kind of breaking down on an intraday time frame on the first, right? So right after that monthly rejection, right after that weekly resistance being hit and rejected, and finally the intraday charts broke down to take a trade. A swing trader, this isn't really something a swing trader would take, because it doesn't really fit the strategies. You could take it as a swing trader, but this would only be like a 1-to-1, and you wouldn't even be able to really protect your stop loss, So it doesn't really, for a swing trader, this isn't really something to execute. For a 1-to-1 play, it's probably not worth it. For a swing trader, I would say look for at least 3-to-1s, But for a day trader, you can definitely do that. And this is something a little bit more common. Like you will see this more and more and more, but this is just utilizing higher time frame confluence. Like the monthly 50 EMA is holding resistance. The weekly chart's got resistance as well. It's a daily pullback, so typically we would only go for like a 1-to-1 on a daily pullback, or maybe target a 20 EMA on a daily pullback. But here you can see targeting the 20 EMA is nothing on a weekly chart, This is more of like this weekly drop, this weekly pullback, so we can target the 20 EMA on the weekly, but we can just keep it simple because that would include trading through 0.382 and the daily 50 EMA. So we can just target the daily 50 EMA 0.382 region, instead of the weekly 20. But that's how much potential it has. It has the potential to get there, and it probably will, but given that it's a daily pullback, 0.382, the daily 50 EMA is the best target. So this is something you'll see more and more. You'll see a lot of examples like this. and simple CBO, so break, retest right here on the 4-hour chart of a trend line and the 4-hour 50 region. 1-hour chart, same thing, break, retest of that trend line, the 1-hour 50 EMA, everything lined up beautifully together. Let's zoom in. So it all lined up together, decelerated, and then the trade was taken with a 5-minute break, and then profit target was set on that daily 50 at 86.6 and an easy 4.6%, instead of a 1-to-1 on a pullback play. Because typically a pullback play is 1-to-1, maybe a little bit farther down to the 20, but utilizing the higher time frames again, the monthly and the weekly, well, you can push this farther, and all of a sudden now you're making 4.6. So that is it. That's it for this lesson. I just wanted to share a couple of examples on how you can kind of combine everything together, either combine the strategies together or just combine the higher time frames, or do both, combine the strategies on the higher time frames, and a swing trader would take it as a swing trade, but you can take it as a day trade. And a swing trader, if they know how to execute day trades, they can also take it as a day trade, and you saw the difference, or you can just there's going to be more opportunities like this. You can take them all, but there's going to be more opportunities like this, that it's a day trade, but it presents higher time frame confluence, like a weekly rejection, monthly rejection. So instead of just taking a quick trade that you would normally take, again, you wouldn't know this if you didn't look at the weekly chart, so again, it comes back to the same question that I got. Why do I have to look at the higher time frames for this? Otherwise you would have no fucking clue what's going on or how far you can push it. If you just looked at a daily and down, you would just see the daily as a pullback, you would just take a quick trade, But by utilizing the higher time frame confluence, you can push it further, to get more percentage out of it. So that is it for this lesson, guys. This is, again, the holy grail. This is my holy grail. This is how you combine everything you have learned so far together into these beautiful opportunities. So that is it, guys. Hope you guys enjoyed this lesson, and I'll see you in the next one.